All right. What's up, tycoons? What is up, traders? Super excited for today's video. We're going to be taking a look at the JASMY coin. Okay. This one actually was a viewer request. So banging out these viewer requests like I do every single week. If you want to see your token, your cryptocurrency in the next video, make sure to comment below and I'll be happy to do it as soon as I can. In today's video, we're going to go over three things. We're going to go over the three Fibonacci retracement levels, the most important levels that you could really watch as a trader, will definitely help your game and improve drastically. Okay. And then we're going to take a look at the MACD. All right. And then we're going to take a look at the relative strength index. Using these three things alone has massively improved my trading over the years. And once you start to master them and really understand some of the price action and how they're moving, you can combine these things together and start to get signals. And once you start to combine them together and you see two or three things aligning, you can have much more confidence in your trading. Now, none of this is financial advice, but a little bit more of informational and just breaking down some of the recent price action, as well as giving you guys examples of the past price action and how things played out in the past using the same methods that we're using in this video. So right now, these are the three main resistance levels that we're going to be watching. Okay, it's 0.0047, 0051, and 0055. Now, the reason these three are most important is because they are our fib retracement levels. Okay, so that's going to be using this tool over here. And the three main ones you want to look at is the 61.8, the 50%, and the 38.2. So just to give you a visualization, what we're going to do is come down. Nothing is going to move in a straight line. It's going to retrace and then continue the trend. Now, you could spot a reversal if we come down and then we start holding the retracement levels and we break through. Okay. So if you break through your retracement levels, then you have a possible reversal, right? But if not, if we come down, retrace to these levels and get rejected, then most likely we're in a trend continuation. So that's why the fib tools are very important. So we'll jump over here in the past just to give you guys a visualization of each time that we've hit our fib levels and then come down, retraced, and ultimately gotten rejected, right? So what we're doing here is we're taking our swing high and connecting it to our swing low. So we have the swing high up here and we're connecting it down to this swing low. So we're looking for a retracement of this move, right? And we come up and we ultimately end up getting hit right here at our 50% retracement level, right? And then we continue the trend down and head downwards. And ultimately, if you take a look, right, we end up coming down to the lows over here, right? We get rejected at these levels again, too, over here. Okay, so we can really see that we weren't able to ever get above our retracement levels, right? We weren't ever able to come up and then go like this and get a reversal going, right? Over here we have the same thing happening. Okay, so we take just even on a smaller level, we're looking at this swing high connecting down to the swing lows down here. We see we come down, we retrace up to our 50% retracement level and ultimately get a rejection and continue heading down lower. We can do the same thing again with the following swing high to swing low. So we connect this swing high down to the, our swing low down over here, right? And we see that we're coming down, retracing, boom, continuing the downtrend. So that's how the fibs work, okay? And now that you understand that a little bit, I want to bring something to your attention known as bullish divergence, okay? Now, again, these are all tools that you can add to your trading arsenal belt to help you improve on your trading. And this one is going to be a possible buy entry. Okay. It is known as bullish divergence. So if we take a look at this box right here, we're basically flatlining on these lows. We're remaining consistent, not really breaking any lower, but not creating higher lows. We're just range bound in this range right here. If we look at our relative strength index down here, we have a low, we have a higher low, and then we have a higher low. So what this means is that the relative strength of this token has been increasing as the price of this token has been remaining flat and making equal lows, right? We've just been range bound in here, not really going any lower, not really going any higher, but we're seeing the relative strength is increasing. That's an indicator you may see some bullish activity. And if we take out our measuring tool, right over here was right along the first bullish divergence. Okay, that's a 34% move. So that's a possible swing trade that you could get in on, right? Now, 30% doesn't seem like a lot, but that's very good when you can consistently come in and find swing trade opportunities or day trade opportunities using bullish divergence. You get 30% trade 4 times. That's 120% off 4 trades, right? So things will add up, in the long run, ultimately. Now it did end up rallying up about 50% almost. And then if we take a look here, this is, and then we pull back down and we see that again, we're staying in these equal lows right here. We're not really heading any lower. We see our relative strength index is up again, right? And so we're coming here and we get another entry signal and boom, we come up another 50% right there. Okay, so that's bullish divergence. That's a valid example of bullish divergence basically playing out and how to use it. All right. And then if we come over here, we have bullish divergence currently on our chart. Okay, so instead of a box this time, it's going to be highlighted by these circles. So we have a low here, we have a lower low here, and we have a lower low here. Well, if you take a look again at our relative strength index, we have a low, we have a slightly higher low, and then we have a higher low. So we're clearly in an uptrend. This token has been building strength, indicating that there may be some bullish activity as the token has fallen in price. Now already it's gone up a decent amount, okay? And we've gone up about 31%, we'll call it, from those lows to the most recent highs. And most likely we're going to come up to and continue some more, right? We're most likely going to come up at least to the 38.2. We may not get there, but I think we're going to come up to the 38.2 and possibly even up to the 61.8. All right. These are numbers that mathematically, whether you believe it or not, about 70% of trading is done by algos, even in the stock market. So math formulas are very prevalent, right? These algos are programmed to buy and sell at certain numbers. And once you start to use some of the tools that they're using, then you can start to trade along with the algos instead of fighting the trends and fighting the algos, right? So that's really what we're watching right now. And what we're looking at seems to be playing out, right? We had some bullish divergence, we have downtrend, we have an uptrend, and then we're getting the bounce up. We're coming up to our retracement levels. And if we break through them, guys, if we're able to come down, break through them, that's when we possibly can have an uptrend starting, okay, or a reversal. Now, maybe not a long-term reversal as it's been an entire bearish year, pretty much across the entire crypto market. But that's when you can look to see if we're going to be able to break out of some of these shorter term downtrends and really get the price action going to the upside. All right. Now, the other thing we wanted to look at was the MACD, and the MACD can give you multiple buy and sell signals as well. Okay. So the main thing you're going to look at is this blue line, right? And this blue line, we see it crosses above the orange line here. It starts trading above the orange line. All right. If we look at our measuring stick, okay, can see we got the entry here, and then that was a nice 65% move from the lows to the highs. Now, they're not indicators that we're going to stay up there forever, but just some indicators that, hey, things, things are going bullish, right? And things are trying to go bullish. Now, right along this time right here, we started to get our bullish divergence building. So it really just helps the case that, okay, well, I'm seeing a little bit of bullish divergence. Now we have a little bit of a MACD buy signal. And so I can come in here and I can look for a trade and then set some type of stop loss once I'm in profit or once the play begins, right? It's always good to protect the trade, especially when you're in profits. The worst thing you can do is be up 50% on a play and then ultimately end up having to sell it, right? So let's say like you got in around here, you catch this move, it's up 60%, you never sell, and then it comes down here and you end up selling for a 20% loss, right? That's one of the worst things you can do. It's really disheartening and really just doesn't help the mentality out. Now over here is an example of a sell signal. Okay, and it's when the blue line crosses below the orange line. And, that's right in through here, right in this time period. And we can see there's a nice sharp drop. Okay, over here, we got a blue line crossing over the orange line. That's another buy signal. And, we are up slightly after that. I've told you guys we're being attracted, the numbers are attracted. The token is going to be attracted to these price levels up here. We've got bullish divergence. We got another blue buy signal. And, it's up a little bit, right? It's up 25% from the entry off the MACD. Again, you're combining that with the bullish divergence that has been going on, and it just helps your thesis out some more. And now you have a little bit more confidence, okay? And now you can take profit here at this 25% and wait for for an entry later, right? Look for some new signals, or you can hold the play and see if we'll continue to head higher up to those retracement levels. And that's basically it. Okay, we went over the MACD. Here's some more examples of some MACD sell signals over here. We'll go over those on the chart real quick. But if we take a look here, okay, we had the blue line cross below the orange, and that happened right here in this candlestick. And big drops, okay, down 40%, ended up dropping more than 40%, but we actually got another MACD sell signal right over here. We can measure that one too. Okay, and boom, that thing ended up dropping over 60%. So really, really useful stuff, and good signs of when to be cautious, when to sell, when to protect your trade, when you see these MACD sell signals, and, combining bullish divergence, combining some MACD buy signals, along with the fib retracement levels will really help you out in the long run because, you can understand, are we just doing a healthy retracement to head down further, or are we going to break through our retracement levels, right? Break through them and ultimately start a reversal. Okay. So if you found anything useful, if you learned anything new in this video, let me know down in the comments below which part that you like the most. Don't forget, I do those viewer requests every week too. So if you want to see your ticker in the next video, make sure to let me know. All right. I'll be happy to do it as soon as I can. And smash the like button, subscribe to the channel if you like this content, because I'll be dropping videos like this every week.